Welcome back to Golden Rule Radio. We hope you guys are doing well this week, and we have some things to talk about. So, is it to anyone's surprise that we're going to start with gold?
No, that's where we generally start, Robert. So we're going to be looking at that 1, 2, 3 hits into the 1263 fib that we put on the chart a number of weeks ago. We had a declining trend line on gold that we did finally break above. You know, we've had a lot of volatility in the gold market, in the silver market, in the platinum group metals as well that we're going to look at here. So to see gold pushing back up above that declining trend line, I think we're definitely off to that 1310 mark at this point. And if we get above that, I expect to see new highs.
Miles, I want to just say, because we're exactly a year since Trump was elected, I think I'd be remiss if I didn't mention, go back and look at what was going on in the market the day of election. Gold was up, what, 4 or 5%? The stock market was starting to crash 4 or 5%. And then there was a reversal. And we've been in this Trump rally in the equities market since then. I think the theme that was going on leading up to the election and then on election night, I think that theme is the real theme that should reemerge as we go forward. The last year, I think we've been in somewhat of a hyped theme about tax cuts. Well, how much benefit is there going to be to this tax cut if they're even able to pass it? I'll just leave that question out there. That's somewhat of a rhetorical question. You as a listener can answer that for yourself, but let's watch and see what reemerges. And so anyway, sorry to get off track. Let's jump back. Where do you guys want to jump back in?
No, you're good. Let's jump back into silver, Miles.
Well, and I think the key point there is the volatility aspect. You know, we're starting to see that same type of volatility begin to emerge in the silver market. We've seen silver pricing anywhere from the low 16s to the low 17s just over the last couple of days, and it's been percentage-wise pretty big swings up and down. Now, granted, it's trailing up.
Well, that's the beauty of it. I mean, and you started the show with this volatility. Here are the actual numbers. Gold, 1.5%. Silver, 2.3%. Platinum, 2.1%. Palladium, 2.5% in 3 days. And to your point, we're up right now because 2 of those 3 days have been up days, and there was a real aggressive knockdown in the middle. So you guys are speaking to the point that that's very bullish. I think so too. And if you look at the charts and correspond it, you know, I think that, $20 move in gold, $20 move in platinum, $26 move in palladium, those are big numbers, you know, that have gone up and down and back up with that type of a swing. To me, it speaks very much of a bullish nature. Gold and the precious metals are telling us something here. And to your predictive point, in all likelihood, we're looking for a breakout above that 1300, 1310.
Along with gold showing strength, the dollar is also strong. And so that idea that that's an inverse relationship between the dollar and gold may not be holding right now because you have the dollar coming up. I think it's going to run into resistance, but it's still rising. The dollar index, I mean, that's just the currency difference for the dollar index, as well as gold's rising. And gold's also not falling. So the dollar's rising, gold's rising. It's not just holding its own, it's also moving together in tandem.
Yeah, but with that dollar chart moving up, I still think that the trend line, declining trend line that you and I have been talking about all summer long, will hold.
I agree.
So I think we're looking at the dollar coming up probably to the 95, maybe 95.5 mark, and then it's going to resume its water slide. Well, and it's important for us somewhat short-sighted Americans occasionally to remember that there is a gigantic world out there that also has effect on these. So when we're looking at gold rising and the dollar rising, it's very unlikely that the dollar itself is actually increasing in strength, but in fact, we're seeing the weakness as we've talked about North Korea, Spain.
Yeah, we want a weaker dollar, according to our president. So you can have a weaker dollar and have a stronger dollar relative to other currencies. So let's move into the other markets here, Miles.
Yeah, it's funny. We were walking in here right before recording this morning, and Tori goes, "Hey, do you have a Dow transportation chart?" And of course I said, "Boy, do I ever."
Look at this.
So through Dow theory, you always want the transports to lead the industrials. If you're not shipping products, you're not selling products, there's no reason for stocks to go up. So we had the Dow transportation peak back in September when the Dow industrials were back around, 22.25, maybe 22.5. Since then, the transports have come down pretty dramatically while the industrials have continued to climb. So this is a textbook explanation of not a healthy, legitimate market move up, but instead inflationary pressures pushing the price up, interest rates coming down, pushing the price up, or just flat out manipulation.
Yeah, or injection of capital into those markets. This is a really, really critical point here that Miles is making. And what Richard Russell, the old sage, would have said was, this is now a non-confirmation event of the Dow Industrials' new highs. So
correct.
Looking again, to put it simply, market top.
And volume always increases in the direction of a trend. So if price is going up and volume's declining, that means fewer and fewer people are interested in buying.
I agree. All right, so skipping through here, central banks, other than to say, as we predicted last week, President Trump did name Jay Powell as the incoming Fed chair. That will be confirmed in February. Janet Yellen will stay in that seat till then. Geopolitically, not a whole lot going on this week other than really a little bit more pacifying language, if anything, from the president towards North Korea. I think on this Asian tour, he's probably gotten a little bit of pressure to calm the waters, and we're even seeing Japan and China come into talks across from the table from each other.
I'll go ahead and say that I'm not yet done with Janet Yellen. So even though she's not the Fed chairman anymore, I'm still going to address her a little bit.
Till February, she's not done with you either.
But anyway, that's just noise. I think the real story that's going on is in Saudi Arabia right now.
I totally agree. This stuff, I mean, this is, here we are today, the 100th anniversary of the Bolshevik Russian Revolution. And we're seeing some significant ripple effects going through the Mideast with what Saudi Arabia is doing. Crown Prince is taking a power grab. He's arresting some of the hardline, traditional extremists, if you will, that are in leading positions, right? And some of them worth billions. I mean, he's taking down the absolute elite. Robert, great point. All eyes on that with me right now, because that impacts the entire Mideast, and we're seeing them accuse Iran of firing a missile that Iran didn't fire. It came from rebels. And so there's a lot more geopolitical strain going on in the Mideast with this whole power grab.
And they've reduced their holdings of treasuries, not to mention them buddying up with China. And China is potentially launching a futures contract for oil in yuan, in their currency, and potentially backing it by gold. And I think actually someday we will see China release official gold holdings, and they're going to be a lot higher than any other country in the world. Making specific recommendations this week, I strongly recommend you try to make one of our intelligence briefings. Tori and I just got back from Kansas City. We're right in the heart of the beginning of this tour.
I got to say, Robert, the biggest takeaway from those conferences was just what a joy and pleasure it is to spend time with our clients face to face. So thank you for going out of your way thus far. Keep it going, and the real value is us being able to meet you personally.
And finally, from a product standpoint, we're going to continue to recommend looking at the 100-year-old British sovereign coins. Those of you that understand the value of owning historic rare coins and the potential profit and premium they bring have already taken advantage of this. Those of you that are strictly bullion buyers, give us a buzz so we can explain the benefits of getting into the rare coin market at some of the discounts we're seeing today, where the price of these rare coins are just sitting 1% or 2% above their bullion counterparts.
We're real heavy on bullion when it comes to silver and platinum. We're not anti-bullion by saying this. It's just when we're talking about the gold position, the premiums are so low in the semi-numismatic market that's where the recommendation goes. So that's it for this week's Golden Rule Radio.
As usual, if you like what you heard, hit that subscribe button, give us a quick thumbs up, and always engage in the comments. We love having something to talk about next week.
Follow us on Twitter at ICA Gold. And again, thanks for listening. You can call us at 800-525-9556.
Have a great week.